Okay, this is going to be an update on my fractal theory that I've been working on, and I've advanced a little bit on the diagrams, so I've drawn them out just to emphasize my interpretation of what I'm seeing in the markets based on ICT price action theory. I've simplified in my own language the way I see price action based on ICT price action theory, and just quickly back to basics. So there's only really two fractals in price that I'm seeing. There is the bearish fractal, which is just two lines, and the reverse of that, which is the bullish fractal. And this could be seen as a bearish order block, and you got the reverse of that. It's a bullish order block. It's a market maker sell model, a market maker buy model. Any different type of area, even down to power 3, where on a single candle, you would have an open price. So if I just quickly draw the candle, we would have an open price, and price would go up in terms of power 3. So you would have accumulation happening, and once we hit the top, what tends to happen is we have manipulation, and then price comes back down into distribution. So there might be a little bit of further down, and price comes up, and eventually it closes. The reverse of that would be again, we have accumulation happening on the downwards move. At the bottom we have manipulation followed by distribution of price until price eventually comes back down and closes. That's the power 3. It can get a bit confusing when you look at it from other methods in trading. That's our methodologies. Accumulation on traditional retail stuff would be at the bottom of a move. We have accumulation at the top, followed by markup, and then we have distribution at the top, and then a decline, and the process carries on over and over. On the ICT stuff, accumulation and distribution mean different things. You can have accumulation on an upwards move as well as a downwards move, and all we're talking about here is gathering up orders on both sides of the market until the manipulation occurs, and that would be on this. It's a market maker sell model, and the reverse of that is the market maker buy model. So you can have accumulation in both directions, as well as you can have distribution in both directions. It's just the interpretation of price is different. I don't think either's right or wrong. It's just a methodology and how it's interpreted. So when I'm working on each time frame, I'm seeking out these fractals, and what I'm doing is, I'm going to draw again, scrap that. So here at the bearish move, a bearish break of structure is I'm seeking the breaker structure, and it always starts with a bullish move. So we have a market maker sell model on the lower time frame, and on the higher time frame we start to see the play out of a market maker sell model. So market maker buy model, market maker sell model. Phase one is the first area of distribution. So they call it first phase one distribution, and phase two distribution is the optimal area to get in on an entry. In traditional terms, that's support turning to resistance, and on this chart, this is US 500. If I start the bullish area my eyes are on, what's this? So we have a high followed by a low, and down here this is there's an area of consolidation, there's manipulation going on. The reason I know that's an area of interest is because on the top here we have fair value, so we stretch out, we've got highs to the right, there's going to be stops there, so they're setting up the area they're targeting on that side. That's part of the accumulation. And on the bottom here we have fair value underneath, so they're setting up this area as well for accumulation later on, or rather distribution, depending on how you look at it. And so it starts with the market maker buy model, and then when it starts to unfold, what we get is we get our first initial drop to this area, and we get phase one distribution. So we haven't really broken yet on this until price drops below, and the telltale sign of that is the fact that we've got this huge expansion going down, and it forms a fair value gap, and we've got a fair value gap here. Now on this particular this block of stuff, I call this the SIBI, which is what Michael refers to in ICT, and you have a fair value gap just by here, and this is the ICT 2022 entry point, where you have a fair value gap and a pullback. It's the optimal trade entry as well, where it's coming back to 60, between the 62 and the 70%, 79% retracement area, which I'll demonstrate in a second. And get to the right one. So that was phase one. We have another expansion, and then phase two comes back to the breaker, and that's the entry. So the target was all of this down here, and that was the that's how I have drawn it out on this. This is the sequence of events that happens. So all of this area here underneath that you see, if I just put Control Z, this becomes like a support and resistance zone in traditional retail. That area there, you can see how it's responding to it as price breaks through. So that's the bearish end of it. On the other side, so we have the first market maker sell model just by here, which forms fair value on either side. So it didn't matter, fair value in there. So we have fair value there. We have fair value by this fair value gap that we got here, and it's too late for me to stretch out to the left, but underneath there will be fair value to the left, and we end up with Control Z. We have this, doesn't really break out so much here, this pullback. This becomes the phase 1 distribution in ICT terminology, and then we have an expansion, and the break happens just about here. So the busy doesn't look that particularly clear on this example, but because it's below the on the bearish move, it's above, but below the bearish the breaker line, sorry, we do have a busy there. We've also got this gap void in price just by here. So as price comes back down to meet the breaker again, we have phase, we have phase 2 of the distribution. It does go deeper into there, but it's taking out this this gap, and we have expansion back up to what has become a sort of support and resistance zone in this area. So I see it as prices on the higher time frame is continuing on a downwards trend, and if I just shift this out of the way a second, a little bit more, that's how I'm seeing price operate. So around that area where we've marked the breaker, there's always going to be it becomes like a support and resistance zone. So if I just mark this out, oh shit, I meant to do that. I'll mark this out. This is support, classical support and resistance in retail stuff, but you can see how price it reversed here. So let me finish off this. We got this, and then there's the reversal. Control Z. We have our breaker and our pullback. Now notice this, where it becomes a little bit iffy. Doesn't really give a very good structure per se, but so this I would say is phase 1. We have the busy just by that. So for me, this in the sequence of things, this is phase 1. So just to finish, recap on all that. Bring these things back in. Yeah. So that's what I'm seeing in terms of the event. You always start off with the kind of counter to what we're looking at. We have a market maker buy model, which is the high, low, higher high, and as soon as we've broken that structure here, then we're into bearish territory, and price will not go into bullishness until we have the reverse of that. So you can see on here, I've demonstrated that concept. We have the high, low, higher high breaking structure, phase 2 delivery here, and then it continues down. Low, high, lower low, breaking structure, phase 2 delivery, and prices carry on going up. Now, where we are at the moment, in my eyes, we're still bearish right now, and we're at phase one of market delivery in terms of price action theory. And I'm going to continue with that narrative on the higher time frame until price goes above this here, or we get a lower low marked out by that, and then it breaks like that. So until that happens, I'm still bearish. So this is essentially what's going on here. That's what it looks like. This is just finishing it off there. Basically, you end up with that type of pattern, and the reverse of that, obviously, if I was to switch these around, put bearish at the top, bullish at the bottom. Sorry, I've got these the wrong way around. Oops. I was struggling with that then. I got this right. Yeah. That's better. It kind of goes like that. So that's where my process is right now. That's what I'm looking for on the higher time frame. What I'm seeing, I'm going to trash all this now. Oh no. What I'm seeing on my analysis that I'm working on Dow Jones at the moment, US 30, the 4 hour gives me the best intraday bias, because the same principle works. You can start on the daily and you can work all the way down into the lower time frames. So I'm using daily as my long term, the 4 hour and the 1 hour as my intraday analysis or intraday bias. So right now you can see on the 4 hour at least, we haven't had a clear reversal back to bearish, although on the daily we're in a premium end of a dealing range. We should be anticipating now a reversal. This was the CPI price action, and we're into that 79% retracement into a premium. So I'm kind of on the sidelines at the moment with this. The 1 hour, very similar. We had the downwards pattern breaker and the bullish breaker here, but we've not really seen very clearly a change in direction on the hour either. So I'm still in markup on both the 4 hour and the 1 hour. When you get down to the 30, 15 and 5 minute, this is where I'm doing execution. So I'm using this time frame to find my entry, and I should only be looking for bullish at this point. There was an entry on Friday. It wasn't a particularly easy one to see with all this squirreliness going on, but it was there at 15 minute as we come into 9 o'clock, 8:30, 9 o'clock. There is a break of structure in a 4 hour supply and demand zone based on what I was discussing earlier on. So that's where my narrative and analysis currently is right now.